Thank you. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, the critical week for your money. So much at stake with mega cap earnings, a Fed decision, that Trump-Xi meeting, of course. We trade all of it with the investment committee. Joining me for the hour today, Joe Terranova, Jim Lebenthal, Surat Sethi, and Bryn Talkington. Let's check the markets. We are extending those record highs on that China trade optimism. We're closer to 6,900 on the S&P than we are to 68. And that gives you an idea of the setup as we get this critical week underway. 5 of the 7 mega caps are reporting. Jensen Huang giving a keynote tomorrow at a big tech conference. You got the Fed decision, as we said, and then that meeting towards the end of the week. All right, Joe. I don't want to be too hyperbolic and say that the whole rally is at stake this week, but it feels like a good portion of the whole rally, at least in the near term, is at stake this week.
No.
No?
I disagree with that. I'm
so
sorry.
the mega caps can disappoint and the rally's just going to be great?
Yes, it will continue. It will recover.
All right.
This is a resilient market. It
All right.
continues to recover from everything. Okay, if you remember where we were at the beginning of the month, congratulations to you. If you stayed long, you didn't fall into the perma bears who have been out there screaming for the last 12 years about valuation and time to short the market. Softer inflation, Fed rate cut coming, on the table for President Trump and President Xi, the workings of a trade deal. Whether you think it's a trade deal of substance or not, it's something that the market is going to applaud. And then lastly, it is about earnings. It's about the revenue that is exceeding expectations at a pace that we have not seen since 2021. Over the last several weeks, there has been short selling that has been building within the market on the belief that the friction that we heard earlier in the month between President Trump and President Xi would extend itself. Last week was about that short covering being unwound. Here we go with mega cap earnings. Even if they disappoint, they are not going to disappoint to the degree that is going to disrupt what is right now a very clear chase for performance and is supported by very strong earnings growth. It is supported by cost cutting. It is supported by margin expansion, and it is supported by inflation that never showed up from the tariffs.
Okay, so Bryn, I feel like that's a good place to have a debate. So the mega caps can disappoint this week, and the rally is just fine. That is the word according to Joe.
They're not going to disappoint, but I think to your point, Scott, you have 5 companies collectively with what, a $15 trillion market cap. There's no way, if they were to disappoint, which they won't, it definitely would change the narrative around AI. And to me, this Super Bowl of earnings this week is all going to be about what is going to be the capex spend, and are the analysts in the Q&A going to start talking about return on equity? And I think the answer is they're going to ask the question, but it's still early days. I think that Meta and Google and Amazon are going to be the most interesting. I think Google's in pole position. I think they're going to crush it. But absolutely, for the AI trade, these 5 companies worth $15 trillion are absolutely critical for us to understand: are you going to continue to be fiscally responsible, or are you going to do an Oracle and all of a sudden go negative free cash flow in order to build out what you think is the next leg in the AI fight?
Okay, so Jimmy, this rally has withstood a lot. As Joe rightly says, it's been incredibly resilient, in part because any bit of negative news, we have still focused on the AI trade, the tremendous amount of money that these companies are spending, and the greater belief from them and every investor out there that this is all going to pay off. And that's why we continue to buy those stocks, and they continue to go higher, and they continue to take the market higher. You think Joe's right that if there's a disappointment among the mega caps that this rally is just fine? Because honestly, I'm not so sure.
Yeah.
If I haven't made that clear to this point, I'll just reiterate it. I'm not so sure. I'm not so sure. I don't see how that could possibly happen.
It's not an inflection point, but go ahead, Jimmy.
I think what you're saying is the chase to performance was the exact term that you used.
I did.
And there probably will be a chase to performance through the next 2 months of the year. That being said, for me, obviously, I look a lot further than 2 months down the road. And when I see an S&P 500 trading at 22.5 times next year's earnings, I say, how can that be? I answer it this way. It's based on the fact that we're projecting 14% earnings per share growth in the S&P 500 next year over this year. Now, if you get that, or if, as has been the trend, you get more than that, then 22.5 is just fine. The problem is, if you start to see cracks form, i.e. if the hyperscalers disappoint, then that 14% becomes more difficult. Extending the argument a little bit, what's also important this week is the U.S.-China trade deal, some form of it. It may not be everything we want, but we've got to get trade uncertainty continuing to decline if we're going to get that 14% earnings per share growth, which to me is the fulcrum upon which that 22.5 times multiple rests.
What is
you asking yourself the question?
No, I want to ask you the question. I want to ask Sarat, Bryn, everyone. So what does it look like if they miss? So that's the inflection point. The rally ends. It's over. There is enough built into this market that it could absorb a stumble from the mega caps.
I don't know.
And I think Bryn's right. You're talking about next year $420 billion worth of capex from 4 of these companies, growing from $360 billion this year. So what does a stumble look like? Tell me.
The math. I mean, you know the math as well as I do.
And that becomes the inflection point for the market? Game over?
No, not game over. But
okay, that's what I'm saying. So you can have this stumble.
And you heard me agree with you about the chase to performance. I do agree with you on that. That being said, with the Mag 7 being whatever it is, somewhere between 35 and 40% of the S&P 500, if they stumble, if they go down, let's just say 5% on a disappointing report, I mean, that's not unheard of. I don't think it's going to happen, by the way, everybody listening, but let's just say hypothetically.
I don't think anybody expects it to happen.
But if it does, because that's the question you're asking, and you've got 40% of the market cap of the S&P 500 going down 5%, it makes for an ugly day, and I think there will be contagion.
Jimmy, it makes for an ugly day. I'm not disagreeing with that, but I'm saying the market will recover and it will continue on its prevailing bullish trend through the remainder of the year.
I don't think it's game over, to use the term Scott just used. I don't think it's game over, but I think it makes for an ugly...
I didn't use game over.
You actually did, but it's okay. It's okay. All right, then I used it. Fine. I don't think it's game over, all right? But do you have an ugly week going forward? Is this something that we skate past? No. I don't think it's going to happen. I think these are going to be good earnings.
There's enough that we could absorb a stumble. There's enough
How about this? Apollo has a look today at what the hyperscalers are spending, since we're focusing a lot on that. They're spending a record high 60% of their operating cash flow on capex. We have made capex the bar of where this rally is, like the barometer, right? Sarat, as long as capex remains high, we deem everything in the AI story to be good.
Right, because then the capex flows to the chips, it flows to construction, it flows to power. So there's a lot there. And if the revenue or earnings come down, and Joe, if that 14% goes to 11 or 12, I'm not saying it's going to happen, but that could be the, quote, temporary short-term scare in the market, which would then say, okay, maybe they'll cut back capex the next quarter.
That would be a very quick reversal, though, on what the estimates currently are doing.
Yes.
Estimates are rising in the near term. They're not coming down. You generally don't see that type of 180 degree.
I'm in Jim's camp. I'm not saying it's going to happen, but I'm saying if that does, that's what you got to watch for.
So we used to look at, and we still do, I don't mean that we don't anymore, but this idea that, companies buying back their stock, as you've often talked about, was a highly stimulative process for stock prices to go up, and investors rewarded the companies that obviously did. No company buys more stock back than Apple, which is one of the things that people always say, no matter how negative the story gets, that, well, there's a floor under it because they're buying back so much stock. What if investors are looking at the whole picture differently now? I thought Reuters had a really interesting look today about this very topic, that investors are increasingly favoring U.S. companies that channel capital towards AI innovation over those offering traditional shareholder payouts such as dividends and buybacks. There was a Goldman look that said, well, if all of these companies are spending so much capital towards their capex, that they're going to be spending less of it towards the buyback. So if you flip it on its head and say, well, if investors are now rewarding those companies that are actually spending more on capex than returning cash to shareholders, does that change part of this equation too for how the whole market looks at these companies?
Well, let me start by answering with the obvious poster child here, which is NVIDIA. NVIDIA is sitting on a lot of profits, and they could have returned that to shareholders, but they looked and they said the most efficient thing, the most productive thing for their business is to go ahead and invest in OpenAI and others, and I think that makes a lot of sense. That's a more productive productive use of their capital. I think, you also have to consider, though, is that the same thing as maybe, I don't know, Alphabet spending tens of billions of dollars on data centers, same things with Meta and others? That question needs to be seen, and it will only be seen over the next 12 to 18 months as we get the return on investment of those invested dollars.
I want to ask everybody, I want to know the simple answer to this question. Would you rather the company that you're invested in use their money to invest in AI or use the money to buy back stock? Whatever incremental money was going towards one, as an investor, would you prefer, do you think it's better that a company use that cash towards their capex rather than buying back stock?
Well, I think if you're the CFO, if you're Amy Hood, if you're across the CFO, you have to say, well, which one long term is going to make me more money? There's clearly going to be a huge waste with all of this capex that's going to be spent. There was waste in the railroads, there was waste in .com, but ultimately those were wonderful infrastructures that we put into place. And I think that, to me, the question I ask myself is really from 2012 to today, these companies have grown so big because they have high margins, and for the most part, besides Amazon, they were capital light companies. Now there's this paradigm shift where these are now capex companies. And I think you have to re-underwrite, as I said earlier, what is ultimately going to be that return on invested capital? And should the valuation and the margins be where they are? Because I do think if they're going to continue to spend the next few years and that ROIC is not going to be high, I think then you question, once again, there's going to be winners and losers. What do you want to pay for these companies? And so I still think we're in the early days of figuring that out. But ultimately, we are at a paradigm shift of cap light turning into capex. And to me, it's not like a temporary thing. These guys are digging in and they're spending this, to me, what I see, years out, which is a change in how we've priced these for the past decade.
Joe, maybe AI is a cure for so-called short-termism, right? We had rewarded companies in the past for buying back stock. We threw out terms like financial engineering as a hit on them, even as we accepted what they were doing because it drove stock prices up. One of the knocks on a company, for example, like IBM, over all those years, they couldn't grow their top line, but they were buying back stock. They were doing whatever. They were criticized as financial engineers. Now they're being rewarded for investing in AI. It goes, and the stock's done incredibly well. Right. It goes towards this very conversation that maybe it's time to reward companies and think of it differently for the longer term rather than short-termism, which people have railed on for years.
So it's indicative of the personality of the market that right now you are rewarded for investing in the innovation versus the capital allocation strategy, whether it be buybacks or dividends. One point on this. First of all, right now we're in a blackout window. So major companies
it's about
to end. But if you go back historically on a 3, 5, 10-year time period, quality outperforms all else, all other factors. Companies that buy back their stock, companies that give a robust dividend, they are the true definition of quality. On a 1-year time frame, though, it is all about momentum. And companies that are investing in the innovation, these are the momentum names. So the personality of the market right now is saying, okay, we understand that buying back your stock or maybe raising your dividend, that's a really nice capital allocation story for your shareholders. But right now, we're not going to pay a premium for that type of activity. We pay the premium in a momentum market for investing in the innovation.
I think it depends critically on what the business is. We're talking about AI, which is transformational. I mean, I don't even know what the words are, but if you're in a more mature company, you and I, Surratt, own Delta Airlines. I want them to return capital to me as the shareholder. I don't need them to get into some new business because there's no transformational business in the airline. If they want to buy a few more planes, take out some debt to do it. I'm not slamming Delta. I'm saying it matters critically what the investment opportunity is when we talk about reinvesting in the company.
Let's talk about, just quickly, because I want to move on. But record high for Alphabet today. They're obviously in the queue for reporting this week. They're going to really kick things off. We can show you the calendar once again, just to keep you honest and let you know what's coming down the pike. So Alphabet record high. Target goes to 300 at JP Morgan. It was at 260, right? They kicked things off on Wednesday in terms of the hyperscalers, reiterated by 285 is the new price target at Truist. Microsoft gets upgraded. Apple is at a record high. Apple's $4 away, by the way, from $4 trillion in market cap. And that's the last one to report this week as we await NVIDIA, which we almost have to wait a month for, about 3 weeks or so. Apple's target goes to 290 today at JPM. The target goes to 275 at TD Cowen. I mention all these just to underscore the optimism that exists into the prints. So they have a lot to live, obviously, up to. Semis hitting a record high today. And there is no bigger story today than Qualcomm as it relates to that group. Shares are surging. You've heard about it already, no doubt. They announced these new data center chips, the highest level since July of 2024. Christina Partsenevelos joins us now for why the stock is jumping so much on this announcement today.
Yeah, it's because of these particular chips and that they're focused on the data center, something that Qualcomm hasn't really focused on. They're launching in 2026, and their first customer is Humane in Saudi Arabia. So Qualcomm specifically is targeting AI inference, running AI models, not necessarily training them. So every time you use ChatGPT, for example, that's inference. Qualcomm has been making AI chips for smartphones for years. Now they're essentially just scaling up that technology for data centers, like the giant rack you're seeing on your screen. But analysts at Bank of America right now are skeptical. They're calling this a potential fade, saying the rally, quote, feels a bit much because they're assuming these new AI chips are lower-end AI chips without high bandwidth memory. They ship in 2026, and so far the only disclosed customer is that Middle East project. There's no U.S. hyperscalers named just yet. Bank of America estimates this could be a $1 to $2 billion revenue opportunity for Qualcomm, but Qualcomm's market cap just jumped about $20 billion today. But you also have Qualcomm is launching years behind NVIDIA's dominance, and analysts are just questioning whether today's rally is justified or if investors are just slapping on an AI label on what might be more modest revenues. Nonetheless, it is a new market for them. Scott?
Now, you raise a good question right at the end, which perfectly tees up the debate that I want to have here. Christina, thank you. Christina Partsenevelos. What is it? Justified this move today?
It's too much today. It's just too much today.
You own the stock.
I own the stock. By the way, I mean, I still think this is going to get above 200 over the next several months, but up 20%, which it was earlier today, was just too much for the news that came out today. Now, let's put this in the context of a very cheap stock, mid-teens multiple, 2% dividend yield, with much greater than double-digit earnings growth in Internet of Things, automotive. Their baseline cell phone business is becoming less and less important. It's those other two that are really the reason to own the stock. But up 20% today on news that we just don't know, what the earnings power is that comes from it is too much. But I still believe in this stock will be well above $200 a share, say over the next six months or so.
Jim just can't be happy. He
it's
just
catnip.
Can't.
I used this word with you today. It's catnip. That's what it is. Throw the AI word out there on any stock. We had rare earth elements.
He can't even take a big gain in the stock he owns.
I'll take it.
Will you?
I'll take it. I'll be happy to take it. It's been, a long time. I mean, the stock trades at 14 times earnings, now trades at 16 or 17 times earnings. Nothing has really changed. We'll see what happens. But what it does tell you is that the market is so big, and investors look at it and say, hey, if they even get a small piece of a big pie, it could be rewarding because they are trying to get out of the telecom business. And I think if they do get customers in this space, it could actually be pretty good for them.
Well, I mean, it appears they are. I mean, they announced their first customer, and we assume that they're going to get more. The market obviously does.
Yep.
That chart's not thinking one customer. It's thinking one of many, many customers, and able to compete, whether it's in any magnitude with the NVIDIAs of the world and others.
Well, I do think if you look at the history of Qualcomm, and it's not like this is a startup that's going to be competing. They are well known. And they do have customers all over the world and also in the big hyperscalers. So there could be potential demand there.
All right. Last story, the A block, is a big one because it doesn't happen very often. Berkshire Hathaway getting downgraded, not just downgraded, but to the equivalent of a sell. A sell. Underperform is officially at KBW. Quote, many things are moving in the wrong direction. You don't often hear that about Berkshire Hathaway. The stock has been moving in the wrong direction, obviously. It's lagged the S&P by the largest gap so far this year, which has been jarring. All of that really getting ignited when Warren Buffett announced that he would be stepping down as CEO. That was May the 3rd. The stock's down 9.5% since. Joe. You get the first crack at this.
Okay. Because we own it in Joe T.
Just justified telling you to sell Berkshire Hathaway?
No, I don't think it's justified telling you to sell Berkshire Hathaway.
That's what they're doing.
I think, so I will disagree with that. I think you're better served trying to understand why this stock has underperformed. And, you know, in our prior conversation, we've highlighted the importance of being allocated and investing in the direction of innovation. And if you think of the businesses that Berkshire Hathaway is involved in, excluding Apple, which you can make an argument they're late on the innovation there surrounding AI, we're talking about insurance, we're talking about rails, which are being punished because of the tariffs, we're talking about energy and energy infrastructure. They do have positioning in Japan that's working out well, but that has been the struggle for this company, and they're sitting on $344 billion in cash. I saw a statistic that they could buy about 80% of the companies in the S&P 500 with that cash.
Okay, and they've
not
been
collectively.
Sitting, and they've been sitting on a lot of cash
for quite
a long
while.
time. So
and they've been sellers of equity.
Whether Mr. Buffett was there in that job or not, they've been sitting on the same amount of cash. So is there enough of a premium, a Buffett premium, that his presence alone shifting is justification for an underperform on the stock?
As I said, I disagree with the sell. I don't think this is an outperform. I think this is a stock that's kind of biding its time before ultimately it finds the next catalyst higher.
Is it a buy today?
It is a buy today. And the reason why is because if you strip out the stock holdings, the Apple, the Japanese companies, et cetera, the operating companies underneath Berkshire Hathaway trade in the low teens as an earnings multiple. And these are, you know, you went through what they are: railroads, energy, aerospace parts, insurance, et cetera. I would say that that's an incredible combination of assets to buy in the mid-teens with the cash on top of it that somebody can do something transformative with, whether it's Mr. Buffett or his successor.
Here's what they say, and what if this supersedes everything? We believe Geico's likely underwriting margin peak, declining property catastrophe reinsurance rates, lower short-term interest rates, tariff-related pressure on the rails, and the risk of fading alternative energy tax credits will drive underperformance over the next 12 months. This says it doesn't matter who's sitting in the biggest office in the coziest chair. This says the fundamentals around the core holdings of this company are challenged.
Particularly focused on the insurance, on Geico, and I think that that is highly likely to be priced into the stock. You never know. Somebody like me says it's priced into the stock. The analyst says no, it's not. But let's face it, there has been a heavy mood on this stock for several months, and I think if it
because of the announcement.
No, I know that, but that probably explains a month or two, not the last several months. I think, look, you see what the U.S. insurers have been trading. They've been trading like garbage, and so I think that has already been priced into. We know that this is an insurance company at its heart. I think that's already been priced in.
So Apple is still its largest position. I wonder if we'd be having a different conversation if they were not significantly reducing the holdings of Apple the way they have since the end of 2023. Different narrative.
It's still his biggest stock holding, though.
Still
yeah,
is.
But it's been a consistent drawdown.
I know, but it's still his biggest stock. This is the
he started in the fourth quarter of 23.
Cuts both ways. I mean, look, if I were running his portfolio and people gave me a hard time, I'm not saying you're doing that, but if people gave me a hard time for selling Apple along the way, it grew too big. It just grew too big.
Well, I mean, they've been taking down almost every stock in the book over the last handful of months at least. What do you make of that?
I think they're ready to pounce. What do I really think? I think that Mr. Wexler and Mr. Combs are going to have a lot of dry powder with which to make their signature on where Berkshire Hathaway goes over the next 5, 10, and 20 years.
All right. Coming up next, we have a debate about the value of Elon Musk. Is he worth $1 trillion? That's what the pay package is. There's a vote coming up. He has to meet some very lofty levels to get that money. We'll take you down the road to $1 trillion, and we'll debate it next. All right, we are going to debate this $1 trillion pay package that is on the table for Elon Musk. The board chair was on Squawk this morning, basically said if we don't approve the pay package, he's going to leave. All right, Bryn, so what's your vote? Is he worth $1 trillion? Should he get this pay package? What do you think?
Yes and yes. I voted. And for all those Robinhood shareholders, Robinhood actually makes it really simple to vote. I think what's getting lost for everyone out there is like, this is dependent, first of all, on the stock being worth $8.5 trillion.
It is. Good. That's, I'm going to show it too.
20 million. Well, not it is.
I don't mean
It's
to
a
interrupt you.
$1.5 trillion market cap now.
I apologize for interrupting you, and I should have been cleaner how I did this. We're going to show, I think we have the wall that was made that shows these milestones in market cap that Tesla has to reach in order for Musk to get the money. To your point, now forgive me again for interrupting you, but here it is. To get to the promised land, so to speak, the market cap of Tesla has to get to $8.5 trillion. So it's broken up into 12 tranches. So please continue, and again, forgive me.
Yeah, so I think when you invest in a company, you have individuals like myself I own the stock outright. And I think you have to trust the board and vote with the board. And this is what the board is saying. The board is all, and or you could be with ISS and Glass, who I think are saying no for nothing to do with innovation, but to do with I think strange policies that have no business right here. And so I'll be very curious to see. I think this will definitely be a clearing event on the stock. Do these firms like Glass and ICE, which are just proxy voting, trump individual investors? And ultimately, where this is ironic is when Elon set up Tesla as a public company, he purposely didn't do a dual class share like Facebook and like Google because he wanted it to be democratized. But that's now coming to bite him in the butt, as they should have done a dual class share, and then we'd never be having this conversation.
Sure. But you say you want to trust the board, you want to vote with the board. I mean, why? Of course. In every scenario, you want to trust the board and vote for the board. Not if the board is rubber stamping something. And I'm not suggesting in this particular case they are. But are you making a carte blanche statement? You always trust the board, vote with the board? I mean,
no,
we've seen rubber stamp boards before.
When we are in an environment where CEOs, get these huge pay packages based on nothing. The LSU coach has $95 million for nothing. This pay package is, Elon, if you do this over this period of time and then this happens, then we will reward you. So to me, it's like aligning exactly what a board should be doing to the founder, to the chief innovator, to stay here for the next 10 years, innovate, and then execute. And then we will pay you this. So to me, it's very pragmatic and sensical versus the nonsensical way that we pay millions and millions to these other CEOs and other like people that really don't even add value to the company. So I think in this case, absolutely, I would vote with the board because they're aligning my return with his pay package.
There are, Joe, I mean, Bryn makes a really good point. There are CEOs that we've seen over time whose preside over companies whose market cap has deteriorated and their pay has increased.
Okay.
So you're a shareholder.
I am.
Through the T?
I would like to read a line from Adam Jonas of Morgan Stanley's note today.
Please.
It is our long-standing opinion that if you solve autonomy for cars, you solve autonomy for many other form factors of AI-enabled robotics, aviation, marine, weapons, etc. This is a moment that would change transportation forever. And he doesn't deserve the pay package if he could reach the targets. Yes, there are other people that might be able to change transportation forever, but he has certainly been at the beginnings of it, and he should see it through, and ultimately I think he should be rewarded for that.
It's good to see the wall that we have made today on the milestones because, you hear $1 trillion, is he worth $1 trillion? But this is a long road to get to $1 trillion, Jimmy, worth of pay. I mean, Tesla's market cap right now is a bit more than $1 trillion. Right. The current market cap is a bit more than $1 trillion. There it is, $1.5 trillion.
$1.5 trillion.
It's $1.5 trillion.
So to get to
I'd like to have a bit more than $1 trillion, being $1.5 trillion too. But $8.5 trillion is the market cap that it has to achieve for Mr. Musk to get the money.
Right. So that's another $7 trillion, and give him $1 trillion of that, 14%. Honestly, I think if he could do that, he's worth it. Now, some would say on the other side of that, but what about the value of his shares, his holdings? Aren't they going to appreciate? Isn't that enough? I would say if you could in some way incentivize and maybe even lock in that performance performance, which is a bold statement, then it's worth it. Give it to him. I mean, $7 trillion is bigger than NVIDIA right now by a lot. And $8.5 trillion, just to be more specific, is 2x of NVIDIA. I don't know if he's going to be able to do it or not. You got to believe that Optimus comes through, that what Adam Jonas is saying about autonomous driving is true. A lot of things have to be true. We'll see if it comes true or not.
All right, welcome back. Gold briefly falling back below 4,000 today, though, as you see, it has retaken that level coming off the first negative week in 10. That gives you an idea of where this trade has been. Joe Oppenheimer today says gold is due for another breather. Allocate to Bitcoin. I thought that was an interesting call there, but you own Newmont.
We do.
We've looked at these miners, the gold miners, and you know, if you pull the chart back out, there's a nice look at it today. I mean, 6.5% down, but the stocks have ripped. Go, I don't know, 6 months, year to date. Give me something. There you go. Thank you. That tells a story about what these stocks have done.
Year to date up 109%. You really are relying on technicals right now because for Newmont, we've already heard about earnings. It's sitting between the 50 and 100-day moving average, pierced below the 50. As far as gold, I think 37.97 for Dees Gold, which is spot, is your 50-day moving average. You're not there yet. So there is the potential for further long liquidation that can take you down at that level. I wouldn't be surprised to see that at all. It's going to take something significant to reverse the near-term downward pressure on precious metals right now. Understand that over the course of time, in particular in January, I think it comes strongly back into favor. What about the pair trade? Gold's due for a breather, allocate instead to Bitcoin. Bryn, what do you think?
I think that's great. I think JP Morgan thinks that's great too. I saw last week that JP Morgan at the end of the year is going to allow their institutional investors to use Bitcoin and Ether as collateral on loans. So I guess Jamie's had a change of heart. So I think it's a good trade. I totally agree with Joe on the technicals around gold. I think that 37.90, we'll see that before it makes new highs.
Okay, where this market is. Bryn, final trade.
Google. Earnings are Wednesday. They were a slow start on AI. Now they're cooking. They just launched Gemini for Enterprise October 9th. I think the street will like what they have to say.
We only have 3. That means somebody else is doing Alphabet.
It's me. Bryn's exactly right. It's that good of a call. We need to make the call twice. Alphabet.
That good of a call, right?
Yep.
Well, they're the first ones to report. We shall see. Mr. Sethi.
Amazon. I think the stock's underperformed. I think they're going to have good things to say, and watch the stock.
Joe T, highs of the day for Lammer, LCRX.
It is.
LRCX, excuse me.
CapEx comes through on the AI. Don't forget the semi-equipment names, Lam, KLA Corp, Teradyne, all of them.
Well, it's a big day for the chips. Obviously, NVIDIA is up, Qualcomm we already talked about. We'll continue the conversation at 3.
Hey, everybody. Welcome to Blue Cloud Trading. We just saw some clips from the halftime report earlier today. It's Monday. It's 5:42 p.m. It's October 27th. Market's closed, and another bullish day. You can see price gapped up here for the Dow Jones, up 0.71%. The NASDAQ also gapped up and moved up steadily, up 1.86% today. It's a big move for the NASDAQ. S&P 500 also gapped up in the morning and continued to move up 1.23%. Russell 2000 gapped up, dropped, and moved up just slightly. So not a big move there for the Russell. It was only up 0.35%. Let's take a look at the heat map. And by the way, in this video, guys, here's what we're going to cover real quick. We will go over the stocks they talked about on the halftime report. There was a number of stocks, not all of them, because some of those stocks happen to be in the Blue Cloud portfolio, which I do share with members. I'll talk to you guys about how you can become a member at the end, how to join, okay? But here are the indices. We're going to go over the SPY, the Qs, the Dow, the Russell, the Euro stocks. We'll take a look at the technicals using the Ichimoku indicator. We'll also look at about these particular stocks: IBM, Qualcomm, LRCX, Berkshire Hathaway. Let's take a look at that one today. We'll look at that on both the weekly and daily charts. All right, Newmont, one of the gold stocks that was down 5.69%. We'll look at Apple, Tesla, Meta. Like I said, a number of these Mag 7 other stocks are in my portfolio. I do cover those in the weekend videos that I do. And if I do exit any of those positions, Blue Cloud Legend level members will find out about it in those daily posts that I post. All right, and I'll talk about that at the end, like I said. We'll also look at some of the strongest sectors and the weakest ones too. And how do I determine which ones are strong, which ones are weak? This could be very educational. If you're not familiar with technical analysis, it's about time to start thinking about it, especially if you have a lot of money in the market. You may not be buying individual stocks. Maybe you have mutual funds. Okay. By the way, the technical analysis can be utilized on mutual funds, ETFs, stocks, currencies. It doesn't really matter. The idea is to figure out exactly where the market is. Is it in like the S&P 500, for example? We're looking at a chart right here of the SPY ETF, right? So this represents the top 500 companies, and by size, right, in the United States. And I mean, you can see here, just using this indicator real quick. Okay, we've got price. Price is above the moving averages. These moving averages are basically, the green line is the Tenkan. That's the 9 period. Takes the highs and lows of the last 9 periods, divides them by 2. So we get the midpoint of each candle for the last 9 periods. So it creates a very, important average, okay, that we can utilize to help us identify, how is price reacting to that average? Is it above the average or is it under? Okay, is there strength or weakness, basically? The red line represents the 26 period. So that takes the highs and lows of the last 26 periods, divides it by 2, and plots it. And unlike most moving averages, this one can actually flatten out because of that fact. Because it is taking that midpoint, you'll notice that many times this moving average actually becomes flat. It's not like a typical moving average like the 200-day moving average, which kind of, you can see here, is moving upwards there. So what else is this comprised of? It's also comprised of the Senku span A, that line right there, the light colored blue line. What is that? That's basically, actually, let me show you a different, let's see, FEZ. Yeah, I'll show you the FEZ. I guess that's an easier one to show it to you on. So what it does essentially is it takes the midpoint of the 2 moving averages. So there's the Tenkan, there's the Kijun, okay? And if you project the midpoint of those 2 moving averages right in the middle there, go right in the center, and you go straight out 26 periods into the future, that's how it's plotted. And so we've got a record here. And what this does is it kind of gives us an insight about where the market is heading. When the Senku span A is above the Senku span B, which, by the way, is comprised by taking the midpoint of the last 52 periods, and instead of projecting it under the most current candle, it projects it 26 periods into the future. That's what makes it unique. So if the Senku span A is above Senku span B, that's very bullish. And then there's one final line for the Ichimoku, and that's the Chiku span. That's the closing price in a line form. So over here, you can see it in Japanese candlesticks, right? There's price right there, $63.57. That's where it closed. Notice how the Chiku span is also at that same exact level. That's because it is today's closing price right there. But instead of showing it here in a line, it projects it 26 periods into the past. So what's kind of cool about this is, you can have 2 different charting pricing styles on one chart, right? So you can still use this, right? It's so much easier also to try to figure out about creating trend lines, right? By using the actual line itself. You can see that it broke above. Do you see this? This is a inverse head and shoulders pattern right there. Okay. How is that determined? It's basically, here's the head, there's a shoulder, there's another shoulder, and right there is the neckline, and we broke above it right there. Okay. The inverse head and shoulders pattern. Let me show you guys that on this little cheat sheet that I have. Let's zoom in on it. Here it is. It looks very similar to what I just showed you. So there's the head right at the bottom, and then you've got your shoulder right there. You got your other shoulder, and then there's the actual neckline. And when price breaks above that neckline, that's very bullish, especially if it pulls back, finds support, and takes off from there. So we actually have that right here. You can see that very clearly on the charts. So I do like what I'm seeing here with this pattern here. So guys, let's go back to the SPY here real quick, and let me show you what's happened here. We broke above that $673.95 level by 2 days now, right? I mentioned this yesterday, not yesterday, sorry, over the weekend, because that was from Friday. This weekend I made a video about this specific, situation that we have here, which is very bullish. The reason it's bullish is because price was kept on finding resistance at these levels here, right? That 673.95 level. And now the fact on Friday, the fact that we broke above it, okay, that was significant. Whenever you see a break above a level of resistance, it's extremely significant. And now we can see a continuation here. Now, what might potentially happen is it could move up another day. Maybe it will pull back, but now we have a level of support, that 673.95. It's a very strong level of support. So if it does pull back, right, that might also give you another opportunity to get back in if you get a bullish candle close to it. All right, so it's looking good here for the SPY. I like the S&P 500. By the way, I forgot to look at the heat map. Let's take a look at that very quickly. Here's the heat map. You can see NVIDIA was up 2.81, Microsoft up 1.5, Apple up 2.28. Look at Google up 3.26, Tesla's up 4.3. A lot of the stocks were up except for Walmart. The tobacco companies didn't do so well. Philip Morris. Berkshire was down 0.82%. MasterCard was down 0.23%. Let's look at the sectors also very quickly and find out what's going on here. Get some more insights on the sectors so that we have a better sense of where to be. Now, communication services was actually up the most, 2.16% today. Technology and consumer cyclical followed it. But basic materials, which includes gold, for example, all right, down 0.88%. Consumer defensives down 0.29%. So we'll have to watch and see what happens. Here's the 1 week performance if you want to check that out as well. Look at basic materials, took a big hit over the last week. Anyway, let's get into this now. So here's the daily chart. Here's the weekly chart. Notice how price is above the moving averages. Chiku span is above price. That's, by the way, I forgot to mention, we want that white line there to be above the candle 26 periods ago. That represents bullishness. When it gets under like it did over here, you can see how that might lead to a drawdown, okay? So we always want that white line to be above the candles 26 periods ago. And in this case, it was 26 weeks. On the daily chart, it's the daily chart, so 26 days, all right? Let's look at the Qs. QQQ, beautiful, right? We had that ascending triangle pattern broken on Friday, right there with that little candle, and boom, it just popped 1.78%. Do you see why technical analysis is important? By the way, one other thing you can look at to help confirm the move is the volume itself. So if, for example, here it was on Thursday, there it was on Friday, and here we are on Monday. And the volume is moving up as price is moving up. So that gives us confirmation that this thing is real, okay? And so my expectation is we will see the Qs continue to move up. There's a weekly chart for you as well. Very strong uptrend overall, okay? Contrast this, all right, with back over here in 2022. And you can see how the Ichimoku would have kept you out of trouble if you had some big losses in 2022, which a lot of people did. This Ichimoku could have kept you out of those trades on the Qs. There was no buy signals here. We can go back even further. So if we go back to, you can see here, that big move up, right? Here's 2020. This was the let me go back here a little bit more. So there's the pullback that happened around, what is that? February 21st of 2020. That led to a drop of about 30.33%. And then we started to spike again. We got back above the cloud and continued. I mean, we can go back further. Look at this. As long as you're above the cloud, you're in good shape, as far as I'm concerned. The market, for the most part, has always been bullish. That's why Tom Lee is mostly bullish, because the market typically is in a bull state. Not always, though. We will have incidents like 2008, the 2008 financial crisis, where things started to fall apart. We saw price getting under the moving averages, dropping, okay, staying under the cloud here and dropping some more. And from these highs, for example, the QQQs had dropped approximately 54.5%. You probably remember that. Right? That's just In 1.1 years, it dropped. Then what happened? The technicals show us that there was a double bottom that formed right there. Price started getting stronger. It got above these highs here. We had a positive crossover, the green line crossing above the red line, which is bullish. Then it entered the cloud. Then it got above the cloud, above the 200, and then we were off to the races, basically. And that's how it is. Right now, okay, the technicals tell us that we should be in these markets still. If things start falling apart, we will see it on the charts and we can act appropriately. So we're using logic, we're using reason, we're observing what's happening in real time, every single day, every single week. As long as this continues, we're going to play along with this continued uptrend. All right, just makes sense. That's why I've been bullish pretty much all year. All right, but you know what? Here's the thing, right? There are going to be sectors that are stronger than others. And so what I do in those weekend videos is I kind of go in depth about what specific sectors should we be looking at for each upcoming week, because it does shift a little bit. There are different stocks that start to pop. And I have a proprietary scanner that helps me, basically find those, identify those strongest stocks. So that's why you may want to consider at least trying out the membership for a month. See if you like it. A lot of people continue to renew their memberships. All right, guys. So there's the Qs. Here's the daily chart. Here's the Dow Jones. Everything is looking good. Okay? Everything is in order. Now, the volume did drop a little bit here in the Dow. You can see that right there. We did get a smaller candle. This one could pull back. Here's the Russell 2000. Now, here's the weakling in the group. As you can see, it continues to stall at that prior high of 250.277. So, and it created a reversal candle. Why is that, negative? Because you can see it's red. Okay, number one, if we look at the 5-minute chart for today on the Russell, this is what it looked like. So price gapped up, and then like I showed you earlier, it just kind of dropped and continued just staying, sideways. So it wasn't a strong move here for the Russell. It looks pretty weak, honestly. Down, it was only up 0.35%. Then you've got Euro stocks. This is a 5-minute chart, but let's look at the daily real quick. So the daily chart, it wants to break. It wants to. It's we got a really bullish candle here, but it stalled right at that 63.60. This is what I'm talking about. The fact that it stalled right at that level is important. It's significant. It's based on that prior high right there. That goes back to October 2nd. All right. The high on October 2nd of FEZ was 63.60. Stalling. But I do believe that we're going to see, I think we're going to see a break tomorrow. If the market overall is up, why do I say that? I'm looking at the volume here. It's increasing. Okay. If you look at the directional movement index, that's starting to move up, right? It's edging up. That's the momentum, ADX9, moving up. Positive DI is above negative DI. That's also good. If you guys like the software that I'm using, it's called TC2000, and there's a link on my channel so you can get a $25 coupon for it. And today what I did on the X platform, you can find my link also, is I posted a chart of gold, of GLD, and from that you can actually, if you do, end up using TC2000, you can use, there's a way for you to actually capture this specific type of, all the indicators that I've got set up the way that I have them, if you want to. Yeah, I'll talk about that a little later. All right, so here's the VIX. The VIX down again, 3.54%, and here's some good news. It's under the cloud now. So we're back in, the markets are not as freaked out, mostly because some positive news. It looks like, China and the U.S. are going to, it looks like, it just looked more positive in the news. It looks like Donald Trump wants to make a deal here, genuinely. So we'll see if if it ends up happening. But it seemed like they're ready to do some he's out there in Asia for a reason, right? So we'll see what happens. He can't come back without a deal. It's going to look really bad. Anyway, let's look at the stocks. We're going to look at IBM. Okay, look at this one. Popped on Friday above that 301.04. okay, based on that little high right there from October 7th, and it's continuing to move up. So that's another thing that, when you get a breakout, expect it to continue moving. It just makes sense, right? There's momentum behind it. So that's IBM on the daily. There it is on the weekly chart, looking very strong. By the way, I've got these 3 stocks here flagged with a little blue flag. That represents the strongest, okay, stocks from the list of 6 that we've got in here. These are not so strong, and I'll explain why in a second. Here's Qualcomm today, up 11.09%. This is a weekly chart you're looking at here. Okay, the cloud itself is bullish. Price broke above the Ichimoku cloud. That's good. It did start dropping though. Here's the daily chart. This is what it looked like. It had reached Qualcomm was up around the high of the day was 205.95, and it retracted quite a bit. It retracted about 8.87%, but it was still up 11.09%. So that's interesting. If you want to see what that looked like on a 5-minute chart, let's throw that on there for a moment. So here was Qualcomm in the morning on the 27th. 1, 2, 3, 4, basically about 8 or 9 candles, and then it started to lose its steam. All right, it lost some of its steam there, but it was still up 11.09%. That was the daily chart. Here's the daily chart. Sorry. Let's look at LRCX. This one here. Okay, there's the high that was taken out. The high of 153.70. That happened today on the daily chart. This is a really bullish sign. I like this one. This looks good. This is the kind of thing that you're looking for. Here's the weekly chart, still looking very strong, hitting all-time highs. That's also a good sign that there's more demand here. The ADX is moving, in a nice 45-degree angle. That represents momentum is building to the upside as price continues to move up. All right, now, DAL, Delta Airlines. There's something off about this one. Let's find out what it is. All right, so this is the weekly chart. The weekly chart actually looks pretty good, okay? So we're looking at the weekly. Here's how you can tell. You look at that little blue highlighted W up there. That's the weekly. When it highlights as blue, we're looking at a daily chart. So there's the weekly chart. Price is above the moving averages. The moving averages are in the correct order with the green line above the red line. Senkou span A is above the Senkou span B. Chikou span is above price. So we've got all those things in order. Looks good on the weekly. However, let's switch it to the daily and find out why it didn't pass the test here. Today it was down 0.82% and closed under the Tenkan-sen, the 9 period. That's the only thing that I see here that's negative about this chart, because everything else does look bullish. So, except for, you'll notice also the ADX is dropping. So just a little bit of a loss of momentum here. So this is not a buy signal here. I'd want to wait for it to get back above that green line again. And you can see that it's kind of stalling in this this range right here for quite a while, Delta Airlines. Ideally, you want to see it break above the high there, that prior high. And that high right there would be 63.91. Berkshire. Let's talk about Berkshire Hathaway. BRKB is the ticker symbol. Down 0.82%. Does not have a blue flag for a reason. It's inside the Ichimoku cloud. One of the rules of Ichimoku is you should not be adding positions when the candles or price is inside the cloud or under. Okay. The other negatives that are happening here, you get the Chikou span under price. Remember we talked about how that should be above. That represents strength and bullishness. The cloud itself is flattening out. You can see that right there. So where it was, as it was moving up here, you can see the thickness of the cloud was always thick. Now all of a sudden, okay, it's flattening out quite a bit. What else am I seeing with Berkshire that's negative? The negative DI. Okay, if you look at the directional movement index here, I've got it at a setting of 9, negative DI 9 and positive DI 9. Okay, so the negative DI is above the positive DI. That's also a negative. So there's a number of negatives here on the weekly and on the daily. All right. Not looking good. NEM, Newmont Corporation, Basic Materials Sector Gold. Remember we mentioned how Basic Materials has taken a little bit of hit. everything started falling apart here with that candle back. That made me quite concerned. I said, guys, this is an issue here because this happened on Friday, October 17th, all right? Not last Friday, but the Friday before. Price closed under the Tenkan-sen, and it was quite a large candle, number one, okay? So if you look at the size of that candle versus the other candles, it was quite large. In addition to that, if you go straight down, and let's look at the volume bar. See how that volume bar there was quite high? It was about double the prior candles, all right? So that told me, this something might potentially happen here. There's some profit taking that's taking place here. This is a big move, big drop in gold. The very next day, I think people saw this as a potential opportunity, right, to get back in, which is what made it pop. But I think the bigger forces out there decided no, they're going to basically continue selling this off and maybe put their money somewhere else. Maybe they feel like it's a little bit overpriced at this point. It does not mean that gold is this move for gold is over. Okay, it has come down now. It closed under the Kijun-sen right there. It's now finding support at the Ichimoku cloud. And it did turn into a sort of a spinning top type candle. And if you look at the 5-minute chart today, you'll notice that, yeah, here we are on the 27th. Price did gap down. And what happened, right? We basically found a bottom right there, at least for the day. And then what happened? Throughout the rest of the day, the afternoon, it started developing that little positive channel, that bullish channel that you see right there. Okay, so I like what I'm seeing here. Check one other thing out. On the 5-minute, look at Newmont. It actually broke above the cloud temporarily right there, and it happened on high volume. I'm not saying that this is going to be the turnaround for gold or this stock necessarily, but I'm just saying that it's found a level of support here. Notice the Chikou span also getting under the candle. That's also not a good sign. Notice also the Tenkan-sen the Tenkan-sen, the green line looks like it wants to cross under the Kijun-sen. But if we look at the weekly chart to get a bigger, longer perspective, okay, last week, well, here's what we had the week before. We had that shooting star candle. That's a reversal candle, right? We talked about that in the past. We also had this large candle last week that closed and created a bearish engulfing pattern. That's also a bearish pattern. And then it dropped. So a lot of negative things happened. For those of you who don't believe that technical analysis and reading candlesticks can be useful, I think you're incorrect on that one, because there's the shooting star. Okay. Long wick, small body. That's bearish. That's a single candle. That's negative. Then you've got your bearish engulfing, small bullish candle followed by a large red candle, and that's also bearish. Okay. So that's exactly what we had right there with those two candles, and then it dropped some more, down 5.69% today. All right, let's continue, guys. Let's continue. But again, it could be short-lived. It could pull back another maybe 6%, 6.6%. Could come down to the Kijun-sen and then find some support right there and then take off again. Nothing is set. It's not necessarily done, this move in gold. All right, let's keep going. But you should be concerned, and you shouldn't be adding new positions here. That's at a minimum. Right here is not the time to be adding. We want to wait for a little bit more confirmation, basically. Here's Apple, which has been showing a lot of strength. And although it's looking really good technically, and I've been talking about it, I mean, I've had the blue flag on here since last week. I said, guys, this is looking good. I'm still holding off on buying this stock. And maybe I'm a little bit paranoid about its exposure to China and how reliant Apple is to China. If things went sideways at some point, right? It's very possible. It's very possible with all there seems to be one week, China's in our good graces. The next week, not so much. And Donald Trump wants to impose 150% tariffs. So when you have that type of it's so all over the place, basically, right? You can't really it's harder to predict where the stock price is going to go. Because if there's if things do go bad with the tariff situation, Apple will be hit harder than any of the Mag 7 stocks, and by a big number. I can guarantee that. Let's look at Tesla. So Apple, I do like it though on the daily, and I look at it on the weekly chart. If you're a big Apple fan, it's up to you to determine if you want to add that into your portfolio. I'm staying out of this one, even though the technicals look good. Tesla. How about Tesla? Now, Tesla also was up 4.31%. It's been in this little, we're looking at a weekly chart right now. So here's that prior shooting star that made the price drop. We had some negative candles here. It looks like it's kind of trying to show some strength, and but it still is staying under the trend line there. There's this trend line right here, the yellow line, and you get that 488.54, which is the all-time highs. And but Tesla's starting to show some strength here too. Here's a daily chart. Tenkan-sen is under Kijun-sen. Does not get a flag for that reason. Then let's look at Meta. Meta on the weekly chart is looking bullish. Price got back above the Tenkan-sen here. It was up 1.69%. Happened on very low volume. All right. And on the daily chart, it's inside the cloud. So that's a bullish signal, but we're still inside the cloud. Chiku Span is still under price. I'd stay out of that one as well. Okay, let's take a look at the sectors, guys. I'm going to run through these very quickly. We don't really need to spend that much time. That's the beauty of Ichimoku, which stands for at a glance. Okay, at a glance, we're going to quickly assess what's happening here. And once you become familiarized with this indicator, it's going to make your trading 1,000 times easier. I guarantee it. Here's the weekly chart with real estate. Yes, price is above the moving averages. It's above the cloud. However, it's been stalling around this area here. 42.65. It's slightly above it. Actually, that trend line is probably a little bit old. Let's get rid of that one. So it's kind of still stuck, again, in this range here, the XLRE. All right, but overall, it's still showing strength on the weekly. Here's a daily chart, okay, stalling inside that range. I think it's going to break above soon. That's my intuition. I can see that the future cloud is giving us some insights right there. The Senko Span A above the Senko Span B. Chiku Span is above price on the daily chart. You know, the momentum hasn't started coming in quite yet, but I would keep an eye on XLRE. I think this has some potential soon. It's been finding resistance inside this box here for so long that I think it's just ready to pop. How about SMH? Here's an ETF that also looks really good. Again, I've got the highlighted blue flags here for the strongest sectors and ETFs. SMH looking good. Okay, here we were on Friday, and it was a very small little candle that broke above the 350.05, and today was up 2.5%. Real easy, real clear, right? The technicals showed us the way, in a sense. Here's the weekly chart, also looking good. Okay, XLV, healthcare ETF. 2 weeks now above. It was up 0.23% today. Actually, let's look at the weekly chart. So the weekly chart, yeah, the Senko Span A looks like it's ready to pop above there soon. That's the only thing that's kind of like hindering here with this particular ETF. I did a more thorough analysis of the sectors over the weekend, where I do, a more in-depth analysis of the sectors, and I can tell you that the healthcare stocks still look pretty good. ADX is still moving up here. This is a small representation. XLV is a very small representation of the entire healthcare sector. If you look at the component watch list here, there's only about 60 stocks. All right. If we look at the, let's go to the drill down here for a moment here of healthcare, just show you. Okay, this is represented by 1,147 stocks. Okay, do you see that right there? That's how many stocks are in the healthcare in the SX60, which is part of basically a ticker symbol that TC2000 has created to represent the sector. And each of these sectors here, all right, has its own, and they're represented by many, many stocks within them. So they give us a better idea of what's looking good. All right, let's take a look at the next sector, which is XLK. This is an ETF that represents for technology stocks. ADX moving up, positive DI moving up, negative DI moving down. Volume is coming out a little bit out of this, which is a little concerning. This is on a weekly chart that we're looking at. Let's look at the daily though. Here's the daily. So that looks a little bit more bullish. So yeah, I think that momentum that you were looking at the weekly chart was based on what was going on here in this consolidation stage. And now that we're above it, I think we're going to see it continuing to move up. I like XLK. XBI, here it is in the daily chart. Today, the biotech ETF popped above 110.96, closed above at 111.59. So I like that one. Here's the weekly chart. Okay, very nice. What about XLI, which is the industrial ETF? This one here stalling at the 155.94. Unsuccessful in breaking above that level on the weekly chart. Here's the daily chart. When it does break above, expect that one also to do well, right? So I've got a blue flag here because price technically is still above the moving averages. As you can see here, above the cloud. Chico span is above price on both the weekly and the daily. Here's XLP. Now, XLP does not have a blue flag. Why? Because price is under the cloud. I'd skip the consumer staple ETF here. Not a good one. Financials. Let's see why this one didn't pass the test. Or maybe it did pass the test today and I didn't catch it. Here, this is a weekly. Okay, we're looking at the weekly chart right here. So the weekly chart actually does look good. Price is above the moving averages in the cloud. I mean, the directional movement index doesn't look that great because negative DI is above positive DI. But the rest of the elements of Ichimoku are intact. But if we look at the daily chart, we're inside the cloud. So that makes sense, right? So that's why it's important to look at both time frames, weekly and daily, before you make your decision. And if you're a more active trader and you're trading like a 5-minute chart, you might also want to use like a 30-minute and a 5-minute, or a 30-minute and a 1-minute. You can decide what time frame you want to trade on. I do have some day trading videos recorded for members that have become legend level members that you can check out. Okay, XLF, like I said, inside the cloud. Stay out of that particular ETF for now. Chico span is underpriced. So it's not all technology stocks that are doing well. Okay. If you look at the the version of TC2000, however, it's more bullish. Just letting you know when I did my analysis over the weekend. Here's utilities, XLU. Under the Tengen-sen still, so it does not get the blue flag for that reason, but it was up 0.27% on the daily. Here's a weekly chart, still looking good. Consumer discretionary on the weekly chart, stalling at that 243.40. On the daily chart, also same thing. The reason it did not get a flag is because the Chico span is still just technically, it's just under by one candle. I think if it gets above, which I think is very likely, tomorrow or the next day, if we have another bullish market, then that's going to give us a nice buy signal, especially when it gets above the 243.40 level. Silver dropping down 3.61%. So it was finding a little bit of support on the Kijun-sen right there. The fact that it actually broke under, not so good. You can see the directional movement index is starting to move up. Okay, the negative DI and the positive DI is moving down. ADX is moving up. That's negative. If you look at the volume here, also increasing. Okay, so there was a little bit of buying happening at the end of the day, though, which is good. But I don't know if that's going to be the determining factor of the turnaround here for silver. Here, this is what it looked like pretty much throughout the day. So I'll just show you. In the morning, price gapped down, continued to drop, and then it was around this time here at let's see, 11:10 a.m. where it looked like it found a bottom right there, and it moved up from that point about 1.7% in a matter of about 4.9 hours. Okay, so silver did have a little bit of a comeback in the afternoon, but I don't know if that's going to be the determining factor. I wouldn't be jumping into silver quite now. New positions in silver or gold I'm holding off on personally. XHB Home Builders is also inside the cloud. There it is on the 5-minute. Here it is on the daily, under the cloud. Stay out of that one, folks. Gold, GLD. This is the chart that I shared on my Twitter. My Twitter page is @BlueCloudTrader. I shared that earlier today. And yeah, it's under the Kijun-sen, guys. It opened up under the Kijun-sen, looking pretty negative. Volume increased. The negative DI started moving up. Positive DI moving down. So gold starting to look a little bit you know, like it's falling a little bit here, down 2.78%. So keep an eye on gold and your gold positions. Consider hedging. I might consider hedging if I see a further breakdown here in the gold stocks, because there are ways to hedge your gold positions, and I talked about it in the members only video this last weekend. Energy XLE inside the cloud. Okay, so no on that one. Tenkinson is under Kijinsen. Chico Spin is under price. No on Energy XLE. IBIT Bitcoin had a nice pop today, up 3.9%, but it couldn't break above the cloud. It stalled inside of it with a spinning top, but the volume was high. Bitcoin might, you know, show some strength here. The single span A is still under single span B. We create a lower low from the prior low, but we have a higher high from the prior high. So we have, basically, we've got what's called a megaphone pattern. Okay, that's what that is, and that's not a bullish sign necessarily. It can go either way. All right, so let's wait and see what happens here. On the weekly chart, you can see that it's testing that Tenkinson right there. It stalled right at it on the weekly. How about XLC? That one's looking good. Communication services, right? On the weekly chart, it was up 1.39%. We mentioned how that was the strongest sector today. On the daily chart, here it is, popping above the moving averages. The only thing that's lacking here is the Tenkinson is under the Kijinsen, Chico Span is under price. So we, you know, the strength has not come in all the way yet, but it's looking like if we have another bullish day, we could certainly see this thing popping tomorrow or the next day. How about COPX? That's the copper miners ETF. That one also popped above, temporarily above the Tenkinson, but then closed under it. So that's, again, falls in the basic materials sector. You know, it was up 0.28%. So copper is a little stronger than gold, obviously, and silver today. And here's a weekly chart, kind of stalling. Unlike gold and silver that broke down after the shooting star, notice how price continues to close above the low of that shooting star candle. That's interesting. All right, that's interesting to me at least. Oil K, under the cloud. So no on that one. That's the K1 free crude oil strategy ETF. GDXJ, the junior gold miners ETF, that pulled back but created a spinning top. So that's the weekly chart. Here's a daily chart. Another spinning top right there. You know, that could lead to a pop. After, when you see a reversal candle, even though it's red, if you see that a reversal candle after a drop, it can potentially move back up again if price breaks above the high of that candle, which we don't know if that's going to happen yet. And why do I say, I mean, why is this a reversal candle? Again, if you look at the dynamic, if you look at the what transpired throughout the day, it tells us a story, this candle. I'll just switch it to, again, to a 5-minute. Here it is. So here's the story for today for the gold miners. It basically gapped down in the morning. Okay, actually I take that, yeah, it gapped down to this point. The dotted green line is the opening price. This dotted red line is the closing price. It's automatically populated by TC2000 when you're trading on a shorter time frame than the daily time frame. You'll see those lines. Here's a 15-minute chart, for example. You can see them right there, opening price, closing price, okay? But basically, when looking at this 5-minute chart, it gapped down, moved up slightly, and then dropped, right, under the opening price and dropped some more. And it dropped about 3.27%, but then it started recovering again around 11:10 a.m. A lot of buying happening, and the GDXJ moved up 3% in that time frame. So, I don't know. We'll keep an eye on that tomorrow. XLB on the daily chart is under the cloud. On the weekly chart, it's in between the two moving averages. Nothing to do here. Guys, that's going to do it for this video. Appreciate you watching. If you want to stick around to find out how you can become a member, stick around. Basically, what you want to do is come to my page here, Blue Cloud Trading. And from here, you can find those member-only videos. If you scroll down, there they are. Right? There's the one that I did this weekend. There's the one I did the weekend before and the weekend before that. Okay, multiple videos in there. And in order to join, you just click on the join button, which is next to the subscribe button. So that's different, okay? And by the way, thank you for helping me reach 24,000. We did it, right? I was hoping to reach 24,000 subscribers before the end of this month, and we did reach that number. let's shoot for 25K now. That's our next goal. But yeah, it's free to subscribe, and then hit the notification bell if you want to get notified when I post a new video. All right. And you'll find me inside your subscriptions once you've hit that. Secondly, if you hit the join button, this is what happens. I'll just show you. This pops up. It's like a little box, and it tells you a little bit about the membership perks. So as a Blue Cloud supporter, okay, you can request a stock to be analyzed or an ETF to be analyzed on an upcoming video. And you just, post it in a comment, and I'll be able to determine that you are a member with your star, okay, because you get one of these stars. Blue Cloud Trader is the next level. All right, under this one, this is where you start getting access to the exclusive member-only videos, and you can request up to 2 stocks or ETFs be analyzed, okay, per month. It's getting harder and harder to do all these requests for our members, so I'm like kind of limiting it a little bit. Then you've got the next level, Blue Cloud Legend level membership. Once you reach this level, in addition to the member-only videos that I just talked about, you can request 3 stocks or ETFs be analyzed per month. You can access day trading videos, okay, that I've recorded. You can also, which you won't find under these levels. Here's the most important part of Blue Cloud Legend is the fact that you'll have access to the daily trade updates that I post. It used to be under the community tab, but now it's something different. Once you've become became a member, there'll be a new tab that pops up right here next to the posts. This is what it will look like. Membership. So here is where you'll find those posts, the daily posts. And then what I do is I share what stocks I added to the portfolio, the Blue Cloud portfolio, what stocks I closed out of, each day. And I also share the results from my scanner. That's a big one, daily. That scans through over 6,000 stocks and gives us a handful, typically, of stocks that look fantastic on the weekly and daily time frame on that particular day, giving us a buy signal on the daily chart. All right, so that's interesting and useful. And although I don't buy every single one of those stocks that pop up on the scanner, I certainly review them, every single one of them, and then if it looks good to me, I will add it to the portfolio. I also have a 20 stock watch list that I also create in the member-only video each weekend. So I add 20 stocks each weekend too. Stocks that pop up that are strongest in the strongest sectors, strongest industries, all right, that top-down, approach to finding the best stocks. Okay, guys, that's going to do it for this video. Thanks for watching. Appreciate all of you guys. Have a great rest of the day or evening, depending on where you are in the world.